Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for June 29th, 2018. Well, hey, folks, this is the last trading day of June and the last day of second quarter. So as we move into the next quarter, we see that futures are popping up this morning. We're getting a little bit of energy in this morning, and I saw a report saying trade tensions have eased. Now, you're going to have to point to where that trade tension is eased. I really don't expect this president to back down on his pressure on trade negotiations. I think more likely this is just kind of an end of quarter window dressing that we might be seeing this morning, which happens fairly commonly at the end of quarters. We have a lot of the big institutions and things have a lot of money coming in that has to be put out into the market, and so we get that end of quarter buying going on to fulfill their obligations of all that 401k money and stuff coming in. So with that, we get this little end of quarter pop. But I want to caution you to remember just 2 days ago that morning pop and how damaging it was if you happen to chase into that. Remember the rules about moving into those morning gaps. Move slowly, move carefully. Also, you're going to want to consider the fact that we have a weekend, the uncertainty of a weekend around the trade negotiation issues. And right behind that, we move into the 4th of July holiday. Keep in mind that Tuesday next week at 1 o'clock p.m. Eastern time, the market will close, and it will be closed on Wednesday. So I think we could largely expect the volumes to begin to drop off pretty quickly. If not today, certainly next week, Monday and Tuesday, we will see those volumes drop off pretty quickly. But I suspect that today, after the morning rush happens, we could easily see volumes begin to decline with this being kind of the getaway day for a very long weekend for a lot of traders. So keep that in mind as you plan your day and how much risk you want to carry into the weekend with a holiday right behind. Now, hey everyone, I want to pass along that Hit and Run Candlesticks and Right Way Options have combined our trading rooms for the next several days just because we know that there's probably not going to be the best of trading out there, and we're opening our doors free to everyone. So anyone listening, please check the link below. You can come right on into our trading room, and we have a schedule of free training that we're going to be doing over the next several days. So please feel free to come on in and attend. We'd love to have you and show you what we do. So with that, hey everyone, let's take a look at these indexes and take a look and see what we've got going on. Well, first, the Dow still in a downtrend, but we did get that nice little rally yesterday, and this morning we're getting this pop up on just the gap up open. Please keep in mind that the Dow is still under significant levels of resistance. As a matter of fact, it could rally all the way back up to here. You can see that 50-day moving average up there. We could rally all the way back up to there and still be in a situation where we would be at risk of failure of making a new low. So watch that really closely and think about that as you plan how much risk you want to get in. This may not be over is what I'm saying. We don't know yet, and there's no way to know whether or not we'll be able to break through. So kind of exercise just a little bit of caution as you see this, end of quarter bounce that we're getting here this morning. Let's take a look at the SPY. SPY also continuing to be in its downtrend. Remember that failure point that we had just 2 days ago right here. I'm going to extend this line over just slightly, and you can see right in here we have that little bit of a resistance area along with the resistance of our trends. So even a rally all the way back up into here, we want to be watchful for the potential of a failure. And remember, we are still underneath resistance, significant levels of resistance in both the diamonds and the SPY. And let's take a look at the Qs. The Qs are also under that resistance pressure. The good news is we tried really hard to hold on to this support level yesterday, rallying back up and just barely recovering it. Now, following through this morning, that is a good sign for the Qs, but we do have these resistance levels up here that we have to worry about. A pullback, remember, support is not support until it's been tested. So a failure of support requires that we get back above and find proof that we can hold that level of support before we want to just start backing up the truck and buying with both hands. Let's take a look at IWM. IWM also beneath the level of resistance, but certainly much stronger than the other indexes and well above its 50-day moving average. So looking pretty good there. So any rally back, we want to watch this area right in here for that potential failure point. So kind of keep an eye on that. Let's take a look at the VIX. The VIX holding above this support area. Notice this is a pretty big area, and we bounced up there, and we ended up, even with that little rally at the end of the day yesterday, held up there. Now with this gap up this morning, we very easily could see this support level in the VIX, the fear index, slip back below. So we could see prices down in here again. That would be a good sign, and certainly nice to see if we can fail this support level in fear and start moving that back down. So watch that closely. But remember, this changes very, very quickly. If we get a whipsaw or something today, like we saw 2 days ago, where we pop up in the morning and then sellers come in and push it right back down, we could easily see this spike pretty quickly as well. So watch that closely. T21 22, whoops. T2122, that 4-week new high, new low ratio. Yesterday, I talked about the fact that we were moving down here toward that reversal area, and we didn't quite make it down in here before those bulls tried to step up yesterday and pick us up slightly, now following through this morning. But let's keep in mind, even if we bounce up into this range up here, we move up in here, that still gives us an opportunity then to move back down. So we could be moving back toward that middle of the range where anything is possible, and you'll want to consider that. So just remember, anything is possible, particularly with the uncertainty that we have in this market and all the political uncertainty of trade negotiations, and then the holiday. We could see some interesting price action and really choppy and kind of anemic price action. So think about that as you plan your next several days in the market. With that, let's go over and let's take a peek at our economic calendar for today. You can see on the economic calendar we have personal incomes and outlays this morning at 8:30. They're expected to remain nice and strong, actually quite strong, even though maybe a tiny pullback. Chicago PMI also expected to stay looking good, and consumer sentiment expected to show really nice numbers. So even though we have 3 market moving events early this morning, all of them are expected to stay relatively strong, as the metrics for the economy continue to remain very, very strong. It's just the political uncertainty creating all this volatility that we're experiencing right now. And then the Baker Hughes rig count comes as the last report of the quarter, and that would be unexpected to move the market. We have 11 earnings being reported today. 11 companies expected to report earnings, with really the only real notable of STZ, Constellation Brands, reporting this morning. And you can see it missed on its earnings, apparently, gapping sharply lower. We're going to be down in here on that open. So missed on that open, or on that earnings event, and there are other reports today, but I don't see anything that's really particularly notable this morning in that list. So kind of keep an eye on that. So with that, everyone, hey, I want to wish you a fantastic weekend. And also, just that quick reminder, check the link below. Hit Run Candlesticks and Right Way Options. We're throwing the doors open. No password. All you'll have to do is click on the link, come on into the rooms. We have training for the next 3 days that will be offered. Lots of good quality training, and it's all free. We're not asking anything. In fact, there's not even going to be big sales pitches or anything like that. We're just offering up some free training to all of those folks that might need some help with their trading. Everyone, take care. Have a fantastic weekend. Be safe. And if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube, follow me button on Facebook. Also, click those thumbs up buttons and drop a comment. I really appreciate it. Everyone, take care. Have an awesome weekend. We'll talk to you all bright and early Monday morning.